Before we talk about the top setups of the week for the battle plan and our core strategy, I want to do a little dive into trading discipline and knowing that to stay disciplined, you really need to stay within your leverage metrics. Okay. This is a detailed training for members that I have also unlocked for everyone watching this video. I want to show you how to get to that training, and we're going to talk about it. So the first thing you can do is you can click this member portal or the academy. It goes to the same place. Okay. So let's just click the academy because that's where it's at. It's at the Core Strategy Academy. This is the dashboard, and come here and click Core Strategy Academy. This is the free foundations course. This is the Core Strategy Academy. This is to make your journal entries, and this is for the current battle plan. So let's hit the Core Strategy Academy, and you're going to scroll down till you find leverage metrics. Click leverage metrics, and here we are. We are at the smart calculator. This is going to help you determine what are the boundaries of your trading. So I want to scroll down. I want to read this to you. Leverage metrics information. Every trader knows that sick feeling when a trade goes against them. The question isn't if you'll take losses, because you will take losses. You will have red days. Here's the key. It's whether you'll survive them. That's the real question. Will you survive the losses? Your leverage metrics is more than just numbers. It's math that keeps you funded. Create it, screenshot it, keep it on your trading screen. It's a constant reminder of the boundaries that keep you in the game. This is important. It's the constant reminder of the boundaries that keep you in the game. And it's the boundaries that you have predefined. This is the actual leverage metrics. This is set up in a way that your first trade is where most of your risk will lie, because you're fresh, you've mapped out your trades, you're live with us on Zoom, we're calling out the price action. You're going to put your most leverage on your first trade. If that trade's a loss, the next 3 trades would be reducing your leverage, but staying within your predefined leverage metrics. In the example, it's a $300 daily loss limit. We're putting half of that risk on the very first trade where you're the freshest, price action is the most responsive. And then if that's a loss, then you smartly deleverage going into your next trade, not increase your leverage. Now you could do this differently. You could just make, nope, I'm going to do the same amount every single trade. Okay, well, adjust your leverage metrics accordingly, which you can do below. So let's get back to reading this. So it's a constant reminder of the boundaries that keep you in the game. Screenshot it and have it on your screen. Every trader has 2 critical thresholds. The first one's the tilt number. It's the effort number. It is where emotional discipline collapses. If you let a trade run this far against you, you mentally shut down and start making bad, horrible decisions that hurt you. And sometimes you do it on purpose. This is where accounts get blown. So the rule is, because it blows an account, never let a trade get anywhere near that number. Never let a trade get anywhere near the tilt number, the effort number. So how do we use that effort number to help us though? Well, we're going to have our working max number. This is a smaller number than the effort number, usually 1/3 of your tilt number. Okay. We'll talk about that in a minute. It stings, but it doesn't wreck you. It sucks, but oh well, I'll come back tomorrow. Me and the price action just aren't getting along today. I'm not seeing the charts as clearly as I should. I'm getting in early. My discipline isn't there, and my losses prove it to me. Or me and the chart just aren't getting along today. This isn't my ideal price action. I should probably walk before I get anywhere near my tilted or effort number. So it's usually 1/3 of that size. It stings, but it doesn't wreck you. You can take the loss, reset, get back to following your plan. This number should define your maximum risk per or trade, depending on how you look at it. What's the effort number for a trade? What's the effort number for your day? We all have different thresholds. We all have different thresholds. And the newer a trader you are, the lower that threshold probably is. Do not be disappointed if your effort number is $90 or $100, $150, whatever that number is. Don't be ashamed of it. Honor it. Know where the tilt number, the effort number lives, and let's not get anywhere near that so you can maintain your composure. For example, if your tilt number is 300, your working max is 100. That's the most you can risk on a single trade, okay? Not every setup deserves that much. Reserve it for your A-plus setups. When I first started with a $2,000 account, my number was $30. I did not like losing more than $30 on one trade. That was my number, $30. Later, it became 60, then 150. These numbers grow as you grow. The key is to know your number and respect it. So ask yourself, what's your number? Know your working max, multiply it by 3 to 5 trades, and this is your daily loss limit, okay? If you're a 3 trades and I'm out guy, well, it's real simple. If your working max number is 100 and you're going to do 3 trades a day, you know $300 is your daily loss limit. That's the number you use here, $300. How many trades do I want to give myself? Know your numbers, respect your limits so you can stay in the game. Now, there's some advanced stuff that is kind of covered here. If you're interested in this training here, I'm not going to go over it at this time. I did it in this video. I don't need to do a video of the video. So leverage metrics is important. It's the key to staying in the game. It's the key to staying way away from the number that makes you go stupid. All right, let's hop on the chart. So Sunday afternoon, I published 2 things. Number 1 is the strong levels. These are the levels that I think are going to be the most important levels on the chart if price gets to those levels. So this was the all-time high closing last Friday. And these are some of the strong levels you see here. There's many more. And then I posted 2 that was above the price action that I felt if price got up in here, these levels were going to be important. If price gets there, I don't know if price is going to get there. I just know that when price gets there, I know what I want to do. And then Sunday night, we got that monster gap up and I updated the battle plan, which is the second thing I post on Sunday. I post the strong levels and then I post the battle plan. How do I want to trade? Where do I want to engage in price on the chart? And I did an update Sunday night, which is rare, but it was a big gap up. And I said, Sunday opening update, monster gap up to the next strong level. It opened up here at this strong level, which was interesting. I recommend not doing a single thing. Careful. We need price to develop and show us its hand, and then we trade later. You don't have to trade every session. Okay, so the market opened with a 50, 60 point gap. My battle plan didn't have any trades that would have activated under this scenario. And you'll see that we played around with the strong level. We finally got over it, back tested it, and continued our journey. But there were no battle plan trades that played in here. But what we're going to talk about first, we're going to talk about our core strategy entries, and then we're going to go back and talk about the battle plans, okay? So on Monday, just talking about the pure strict core strategy trades that you learn at the Core Strategy Academy, there would have been 1 short and 2 longs. And of course, I would have not taken any shorts at all. This was a gap up. We were maintaining the gap up and we were still laddering up. Long was the play. and getting up over the strong level certainly presented that. But just strict core strategy, you had those trades. I know one of the traders in the group, you never have to tell me your trades. You never have to tell me your P&Ls. You don't have to share any of that. But if you do share it, I try to have a good memory about what trades people are in. And I know Matt took that trade there and held through the close. And that was a very nice trade as well. So one short, two longs, that worked out well. Now let's scroll over here. Tuesday, I believe, had 0 core strategy trades. There's no levels on here. I would have pointed out for a new trader to draw when he goes for his badges. Okay. So when you become a member, you're going to learn to draw 3 levels. You're going to submit your chart, and I'm going to grade those levels for you. I'm going to make sure you're marking them correctly. I'm not sure I would have had a trader mark one. Now, if they'd have done that break level there, it did bounce 7 points. So maybe there's a core strategy trade there. That bounce right here would have been the long. It did bounce 7 points. So I don't know. I just, if you want to discuss it, if you're a member, go on the Discord group, post your argument, and then we'll talk about it. So if you want a little weekend homework, let's talk about Tuesday, and that break level. Okay. So let's come over here to Wednesday. So Wednesday was FOMC. In that vein, I did not post any battle plan trades going into Wednesday. To me, it's a no trade zone. We had FOMC, Trump and Z, and tech earnings. There are easier weeks to trade. I didn't post a battle plan. But if you traded core strategy, you did have this one short here. Once again, it's FOMC. Should I be trading? Should I be trading? Should I be trading? Probably not. And then you get this wacky stuff. We traded live in the afternoon. We had some really nice scalps there, but that is not core strategy. That's literally price action trading with us together. But one core strategy short there on Wednesday. And then Thursday, well, you got more core strategy trades. To me, there were 4 shorts and 1 long. No losses. If you'd have held onto the shorts, you'd have done really, really well. I was short here. Unfortunately, when this thing came back up, I decided to capture my 10-pointer from here, and my 10-pointer was right in front of the strong level, and it tapped that strong level and bounced, and oh well, it is what it is. The strong level here played really well. Strong level here played really well. That's very nice. And I would not have taken this first short. And I just want to mention that because that would have been countered to the battle plan trade. And of course, I would have only been looking for longs. Why? Bulls control. And then after all of this consolidation, I didn't take this short. But I did end up taking that short. If you were with us, I was long here off of this candle off of MES, which went much further. The MES candle went much further. I was long at 55, and on the live trading on YouTube and Zoom, I took a 20-pointer on that. So what about the core strategy trades for Friday? Well, you got this 1 long here, which is the trade to take, and you could have taken these 2 shorts. You wouldn't have made anything. You'd made something, or you would have taken a break-even trade. One of the things to note is when you have this strong downtrend, and I posted in the group, this is something really important. I said, hey guys, we made like 6 ladders down. So there's 1, there's 2. I don't know. Would you count that as 3, 4, 5, 6 ladders downs? 5 to 7 is usually all you get. Then you got this the beginning of a strong reversal candle. Let's talk about this here for a second. Let's continue talking about the trend line. And then it broke that trend line with a vengeance. So if you're short in this move here and you see that it breaks that, you don't need to hold through the continual laddering. Things reversed, things changed. Now, we were looking for one major thing to happen. Let me just pull up my session levels, and it didn't happen. It didn't fill the gap. I was waiting for it to hit at least 41, if not make it back down to my strong level at 32. I told the group there's two things I'm looking for. I'm looking for battle plan trade number 2, which would have took it to here, or at least fill the gap. If we would have filled the gap, I would have been long on this candle here. It was a beautiful 1 minute level, but because we didn't fill the gap, I had no confidence to take any trades here, and I didn't. I just watched. I said no thank you. Although this was a beautiful core strategy long as a second ladder, I still chose not to take it. I was just banking, hey, we're going to fill that gap, and it just didn't happen. Oh, well, I don't have to participate. It was weird that I was not in the reversal ladder back long. It felt weird, but it didn't make it to the location I wanted to engage in price. It just didn't get there. Let me pull up my Thursday. Yeah, here, battle plan trade number 2. So I was looking for price to get between here and here. Now it got here. It did. Okay. In one respect, I could say it made it to the zone that I was looking for price to bounce. It bounced off the top of the zone. I wanted it to come to the bottom. And because we had the 41 right underneath it, I wanted it to tap it. If it would have tapped it and then ladder back, I would have been much more aggressive long here, but it just didn't work out that way. Now let's talk about the battle plans. So Monday night, I published several battle plan trade ideas, and the one with that activated was the battle plan trade number 1, a possible short trade idea. Pop near the expected range and ladder back inside the range. If you get short, try to keep a runner. It's the day before FOMC. It can be a wild card, and you just might be holding the full house. Now, it didn't happen in the sense of that FOMC did not vomit. It didn't derail the bull train, in my humble opinion, but we did get that pop above. When we reopened, it definitely offered a couple opportunities to be short. A really great exit, if you got that short, would have been when it touched the strong level, because you're probably going to get a bounce. Certainly a great place to TP. And so that was battle plan trade number 1 on Monday. Now, as I stated earlier, Tuesday night, I did not release a battle plan because Wednesday was FOMC and big tech earnings, and just did not feel like it was the right time to trade. So I did not even propose any trade ideas. FOMC finished on Wednesday, and before the night session began on Wednesday, I posted battle plan trades. If I put it in green, it is my preferred trade. And in fact, I've started labeling it as my preferred trade in green for the notes. I said requires snappy laddering. Reclaiming the Sunday opening would be ideal. Watch for the ladder back structure as it develops. Below here, we could close the Sunday gap. This takes 2 daily lows, so it was certainly in the preferred trade. And then when we were live trading together on Thursday, I took this battle plan trade 2 and I slid it over so it was more visible for us. I added this box because that's where I'm interested in engaging in price. We made it down here for this snappy response back up into here. And if you remember when we were talking about the core strategy, I said I wasn't going to take any shorts until later in the day there, then presented that opportunity for this short. But the goal here was to be long and hold a runner because bulls control. We were holding the gap up well. It was certainly my preferred battle plan trade. And the goal there is to hold your long, not necessarily start looking for shorts. But that was battle plan trade number 2. And I appreciate Scott's comment here on Zoom. I really appreciate how calm you always are on your trades. That's the dream. And yeah, that is, I appreciate that comment. And that's one of the things that Zoom brings to the members. It is a calm trading environment, clearly outlining the trades we're interested in and waiting for those entries. And then Thursday night, what were the battle plan trades? Oh yeah. So I only posted 2 Thursday night. There was only 2 trade ideas I was interested in. And in this trade here, I said that if we reclaim the strong level, this would be a good add-on. And if it was your initial trade, to do it small. You had a couple opportunities to take that trade, made it back to the strong level there, ping pong between those strong levels really well. Then you got that full extension above the RTH high. You take your profit there, keep a runner just in case. You don't know how far price is going to go. I don't know. You don't know. And then battle plan trade number 2 here. This is what the second trade idea we were looking for. And if you remember when we were talking about the core strategy trades, it made it to the top of this box of where I'm looking to engage in price, but I wanted it to come a little further down. I did not participate in this trade, which really burns me, but because it was mapped out well. Yeah, it did make it to the top of the box. I wanted the bottom of the box. Oh, well, sometimes you're too greedy and the trades just don't work. So on Sunday afternoon, I'll publish the new set of strong levels and the battle plan going into Sunday night, Monday trading. Hope you had a great week. I'll talk to you soon.